Good morning! Hoorah! Happy Friday. Clean shave, yeah. I went and got a straight razor shave. It's like 8 or 9 steps, where they put conditioner and lotion and all that on, and then aftershave and powder. It's the way to do it. Pretty cool. But thank you for noticing. Yeah, my wife said, "Oh, good. It's nice that you don't look like a scumbag anymore." I'm like, "Oh, whoa, 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 whoa." So anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. It is, I can't see it. What is it? 11/17? 11/17. It's Friday. Been up long enough where I've watched a Dave Chappelle show, a routine, stand-up comedy routine. Nothing like trading with stand-up going on behind the scenes. Good coffee. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Really? I look young again, huh? How nice. Do these sessions 7:30 in the morning, Monday through Friday. You can attend live at Forex.Today. You can watch recordings on YouTube. Live is better because you can ask questions. I actually encourage questions. Pretty nice, right? So let's do some technical and fundamental analysis if you want. Still sort of, in the stock market, the volatility is kicking in, but nothing unexpected seems to be happening though, right? You know what I mean? But anyways, let's move this over here. Let's do this. Let's pop up that. Let's go. Okay. I'm hoping to get on a plane today, but not to Dubai, to head up to Singapore or more likely Hong Kong. So maybe have lunch with lunch and dinner with Daniel. What are you doing this weekend, Daniel? Yeah. Oh, sweet. All right. So anyways, let's see how that goes. Let's go through the charts. Dollar yen, not a lot going on still. Did hit the pivot point though, right? So we need to be grateful anywhere we can. We need to look for opportunities to be grateful, I think. One of the things to be grateful for is this is a sell zone for bears, and this is the target for bears. And, well, cool. It worked for them. All you had to do was be a bear. If you were a bull, you didn't really get an opportunity. You could, like, pull the trigger off of this. Because, yeah, there's a pivot cluster plus this, so there's three pivots or whatever going on in there. That's cool. It's not. It's still kind of like catching a falling chainsaw, though, isn't it? Right? So it's like, really? Is that really what we want to do? No. What we really wanted was this up, this down, and then off to the races. It's feeling less and less likely. I hate to say that. I know we're supposed to stay strong and stay focused, but, I don't like the fact that we dropped below this area, as you know. So being down here, boy, oh boy, not cool. Yeah, Ryan, yeah. Well, how about on the flip side of that, Ryan? What did we pull up? I did a relative strength exercise on Monday, was it? And we talked about Euro Aussie benefiting from the whole situation. Is that right? That's right. Ryan brings up a good point. We got to do our job. But anyways, right? Do you guys remember the relative strength exercise? Somebody said, well, Wayne, do you use the dollar index? I'm like, dollar index? Really? I'm like, let me show you how to do this. Yeah, cool, right? And then that's how you go, relative strength. That's quite a rocket ship, though. Nobody, I don't think anybody thought that, right? But where's the opportunity to be grateful? Well, the projected high for the month of November is here, right? And look, it didn't really fall here, didn't really fall here. Well, it fell a little bit here. That's the R1 resistance. Even in an uptrend, we had a 12-hour, 8-hour, actually probably close. You can see almost 12 hours. It was down, then up. And then the second one is, I'll just call this R2. R2. And that was 12 hours. So 8 hours, 12 hours. Did price respond to our lines in the sand that we use by just doing calculations, right? That's market resistance. I mean, 8 and 12-hour time frames, if you're on a 15-minute chart, that's your entire day. To think that some people live and die by this stuff. Isn't that amazing? Like, what did you do today? I was all over the place. Oh, the markets were crazy. They're all over the place. They were going up. And I don't use monthly pivots, so I had no idea it was kicking off of the R1. So even though it was up for 2 days, I started buying it, and then fell, and I lost money. And then as soon as I lost all my money, it started going back up. I'm like, yep, that's a day. Yeah, that would be one trading day. Right? Yeah, typical. Well, so anyways, yeah. That's more than 8 hours, so we could call it 10 or something because you can see it spike down. 8 hours is a full work day. Right? And then in here, kicked off R2. Great. Then we get to the projected high for the month, right? MR2. This is MM4. I would say that's pretty reasonable levels of respect, don't you? It's reasonable. So, I'm thankful and grateful for that it's not a random walk. I know some people lost money in here. It's because they don't know what they're doing. Or they took a calculated risk. They thought it would reverse. I could see this trade here, selling it off the top and hoping it comes back. I get that. It's not, you don't really want to make a career of selling into an uptrend, but I could see that situation. Well, did you lose a lot of money? No, impossible, implausible. So if you took a shot here, put a stop at the top, and you lost 30 pips, it's like someone passed you the ball, you took a shot, It's from your favorite spot. It wasn't a three-pointer. You're pretty much open, pretty much in your comfort spot. Took a shot and, oh, bounced off the rim. Ah, happens. You didn't lose the game. Should have made it, but it didn't happen. And, well, keep taking shots. Most of the time you'll be fine, right? So anyways, took a shot here. Maybe. I don't, maybe, yeah. Oh, I see what I did. That's not WR1. It's M3. It's still the M3 is even more important, isn't it? That is the weekly sell, especially on a Monday. So if that didn't work, fine. If this didn't work, fine. But then there isn't anything else, right? And then we hit the monthly target. So it's still respected. It's still respected our lines. Cool. This is my message to you. Don't worry about a thing. Yeah. Every little thing's gonna be alright. Woke up this morning, smiling at the rising sun, free as a bird. Alright, cool. Monthly S1. That tells us we should be on our way to monthly R1. I don't even know where that is. Oh, dude, who's typing in the long questions? Stone, yeah, keep it smaller because Stone, I can't read it. So let me go back. Question on latest FOMC in the press. They write blah 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 blah. How to interpret the last part? The federal Fed's right likely to remain for some time below levels that are expected to prevail in the long run. That means they're raising interest rates slowly. That if you would expect like interest rates normally to be, let's say, at 5% or something, it'll take a long time to get there. Now, there is sort of a basic assumption. When are interest rates at or near or around 5%? Just very, very rough idea. Give me an idea. Just very rough. When would you assume interest rates are at 5%? Not time frame. What kind of conditions? See, that's a guess. What makes a central bank raise interest rates? Not economic activity. Inflation, not full employment. We don't care. I mean, that's a mandate, but no, they raise interest rates because of inflation. So will interest rates be 5% when inflation is 2%? No. So let me ask you again. What kind of, when will interest rates, not what time, not what date, when will interest rates be 5%? Well, can we be a little more than specific than when it's high? How about this? When inflation is at or above 5%. No, I reject the 3 to 5. You can't have 5% interest rates and 3% inflation. You would absolutely crush and kill the economy. And that would go against one of the mandates of full employment, right? Okay? Yeah, okay, cool. So what is the inflation level now? Well, okay, let me ask it as a question. What is the inflation level now? Okay, we'll say, let's say 2%. Okay. What is the interest rate in the United States? Okay. You see, we could raise interest rates. Interest rates could be as high as 2%, right? Not really, but they could be 1.5 without any problems right now, right? If we're cruising around 2%, interest rates at 1.5 would be, yeah, okay. All right. So they may be discussing this dichotomy of long-term interest rates where, and short-term interest rates and such. Now, they're also maybe talking about the yield curve, but I don't think, based on that comment I very quickly read through, I don't think that's what they're talking about. But then there's this other idea that they're raising short-term interest rates, which is the Fed Fund futures market. Those are very, very, very short duration paper, right? But what about 30-year mortgages, right? And so they are going to start thinning their balance sheet, dumping long-dated notes and raising interest rates there. So instead of raising the Fed funds rate from 1.5 to 2, what they're going to do is, or 1.25 to 2, what they'll do is raise interest rates to like 1.5, short-term interest rates 1.5, and then they're going to spend their time raising long-term interest rates. Oh, I have to do it backwards. Steepening the yield curve. But we're getting a little too esoteric here, I guess, right? But yeah, they're steepening the yield curve. Because this is what economists will argue about, right? The slope of the curve, the shape and the slope of the curve. The level indicator, so I can master it. What the heck is a level indicator? I have a small head, Mendigus. That's all. I'm a tiny person. Oh, pivot points, Kenny. Interesting. You can Google pivot points. You can read my book. You can take a technical analysis course at FX Bootcamp. Yeah, the swing takes a lot, but it's also covered in the book. It's covered in basic training, strategic and tactical Forex trading. Yeah, but like the basic training, I think, is like 10 hours, and I think the swing trading course is about 10 hours as well. Something like that. I mean, it's a lot, but anyways. All right, so yeah, what were we talking about? Oh, the slope of the yield curve. Yeah, okay, great. Pig dog. I berated an Englishman yesterday. I'm like, what's wrong with you guys? What are you doing? Well, then he gave me crap over elephants, importing elephants from Africa. Okay, great. Yeah. So anyways, top of the range, kind of. It's just very, very mediocre. Like here's a big bottom and all this kind of stuff, and it went up off the MS1. So again, that would be MR1, and that's way up there, and it doesn't feel like it's going there. This just seems like, oops. Not very excited, I guess is what I'm saying. It's not very exciting. Like for example, if you were going to be a bull on this, and what are you going to do? Try to buy the 55? That's not cool. You can see the bear setup in there. If you were trading this actively, London Open, that's pretty easy, right? Can you see it? Let's clear this out. Break. What do you do after a break? Retracement, right? Nice. So like it's, I mean, it only dropped a half an hour, but it's a day trade, right? So you know, what is this? 25, 30 pips. Yeah. Okay. Busted out. But I got a lot of my trades busted out. Still up 100 and something pips. But just the euro yens. Everything else is falling apart. All right. Yeah, I guess we got to do Aussie. You got to look at it. Can't avoid it forever, right? Now, if you're short trading, it's fantastic. It just didn't fit into my long-term bias, but that's all right. So it started out well, and then this failed, right? Lower low, lower high, 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 lower low. Okay. Neat, right? So that's price action. That's straight out of the price action course on FX Bootcamp. Pretty simple stuff. Right? The only way you get this wrong is if you happen to be a bull and you're waiting. This was a buy zone here and that failed. And then the next buy zone is really down here as a counter trend. You don't typically do that on a Thursday, right? So it's just like sort of a bust week. You might have bought it on Monday and maybe tried again Wednesday. But that's all there was if you happen to be a bull. And if you were doing all of that, you know, I don't know. We'll see what happens. Like we're here now, right? I got 3 lines of support, basically treating it like a bottom, but that's not ideal. It's not an ideal scenario. But you might be hoping for this type of play, right? So what we were hoping for is like this. That's what the plan was on Monday, right? So now we're down here. Not really what I wanted. Let's try to change things up here. You are the 1, 2, 3, 4, 5. Oh, those are monthly pivots? don't have a lot to go on this week, man. So let me zoom back in. I don't even have monthly pivots on this. Yeah, it's very disappointing. I had high hopes that it was going to be a turnaround week. So we're, again, we're running out of hope. So what do we have here now, right? Where do we go from here? Is it 85 that we're buying kind of thing? Or is it more like 84? It smells more like 84. Katie says there's divergence on weekly charts. I don't use weekly charts that way. Sorry. Doo-doo. Doo-doo. So it's down, 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 unless I see it bounce at support. That's it. I really don't want to start buying Japanese yen until January. It's just I feel more comfortable. It's just I guess I'm an old man in my old ways, right? An old man set in his old ways. Okay, monthly R1 holding this. Check. Notice how in many cases the monthlies are superseding the weeklies. Where do we go from here? Which is the way that's clear. On the long run, I would like to see weak US dollar. Oil. So here's the consolidation. Here's the breakdown. You see the frackers are fracking? Because the fracker's going to frack, 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 frack. And the hater's going to hate, hate, hate. Shake it off. Shake it off. Shake it off. Shake it off. Right? Because the fracker's got to frack. So oil being produced, United States production is at what, a 30 or 40 year high? The Russians and the Saudis are not they're not playing well together anymore. Did you notice that? They're getting that relationship's getting testy. So as a technician, you would dump it here, right? Does anybody have a question? Ryan says 56.50. Doesn't matter. If your stop was at 58, are we going to go to 58? Or 59? Right? So just depends on how close you keep your stop, right? Where do we go from here? Which is the way that's clear. So I don't know. Do what you got to do, bro. If you were a bull, you should have bought down off the 21. But if you're a bear, you should be you know, waking up and drinking your coffee and thinking about doing something with your day. Okay. So it's like one of these things. I don't mind oil going up, but does it have to go up today? And this comes to your analysis and your hypotheses even. Are we on our way to $65 a barrel oil? Like right now, are we on our way? Right? Robert says maybe. Others say no. What was one of the catalysts for oil to break above our current area that I've talked about 2 or 3 times? Increase in global demand? No. Cold winter? Tell me more, Robert. Daniel. Heating oil. Who buys heating oil? Well, actually, refineries buy crude, right, and crack it, not frack it. They crack the crude. You guys know how they do this? All right. How can you go through life without knowing such things? Right? This is what your dad was supposed to teach you. All right. I'll put a shadow on it. Okay. This is a cooling tower at a refinery. They pump some crude in here and they boil it up. They heat it up as hot as they possibly can get. And it starts to separate, just like anything else. The light material goes to the top, the heavy stuff at the bottom. The stuff at the bottom is tar. What do you use tar for? Roads. Okay. Stuff up here, jet fuel, kerosene, that kind of stuff. Okay. Everything in between is like used for plastics, right? Oil, heating oil, let's say, car oil, makeup. And there's also nat gases. When you pull oil out of the ground, natural gas comes out, and then you can crack that and make things like fertilizer. Okay? And so what happens is they start separating the heavy stuff down here, the light stuff in here, and there's all these little products. Okay? So then what they can do is they could suck out the stuff that they're going to use for plastics, and they make that into a product. They can suck out heating oil, make that into a product. They can suck this stuff out, make some jet fuel. They can suck this other stuff out, make gasoline, right? I'm not sure where this makeup stuff comes in. It's probably down here. Petroleum jelly, Vaseline, you know, that kind of stuff. And so they make these products. So if there's demand for heating oil, which is a derivative of crude, so the demand for derivatives goes up, then the refinery that makes these products, they actually buy the crude, refine it into a derivative, and then sell the derivative in the open market. It's a business. So suddenly, if there's a high demand for heating oil and there's not enough heating oil available in the market, they're going to need to make some more heating oil. Therefore, demand for crude from refineries increases. And then we know as you shift the demand curve, right, that prices will tend to rise. So, just for fun, yesterday I asked Google what the temperature was in Atlanta, Georgia. And then we asked Google what the temperature was in Boston. Boston's in the northeast. Atlanta is in the southeast. Which one was warmer, Boston or Atlanta? Boston! Boston was warmer. What? I mean, that could change in a heartbeat, right? That could change in a heartbeat, but it's warm right now. So you could actually watch weather. Now, I've taught you guys this in the past, you know, like tracking hurricanes and stuff. If you're going to trade like a commodity like that, tracking weather could be a very important thing. If you're not doing like El Nino and La Nina analysis and stuff, you're not a currency or commodity trader, right? I heard of one commodity firm, and I think probably lots of hedge funds do it now. But many years ago, I was reading about how one hedge fund was renting old Soviet Union spy satellites, literally paying the Russians to use their spy satellites. And they were flying over the Ukraine, looking at crop, doing crop analysis to see how much wheat was growing, literally growing in the fields of the Ukraine, and so that they could do sort of like yield analysis and can guess based on data how much wheat was going to hit the market, whether they should be buying wheat futures or selling wheat futures. Takes money to lose money. Right? Cool, right? So, you know, we could be tracking these things, and you could find out, is there a cycle, and when did it get cold? What was the average date over the last 10 years for the Northeast to go sub-zero, or even like colder than, let's say colder than 20 degrees? Okay. When is the average date? And then when is sort of the exponential date, right? And you could start guessing and maybe start buying futures based on all that kind of stuff. That'd be C. Oh, sorry, what did I say, 25? Well, obviously then that's F, Fahrenheit, yeah. Sorry, I go back and forth. I'm Canadian, I get caught, right? These things are difficult, right? So for example, if an airplane crashed on the border between Canada and the United States, where do you bury the survivors? Canada or the United States? This is an MBA question, by the way, a GMAT question. You don't bury the survivors. Thank you. That was Stone got it. See? Aha! Aha! You gotta be wicked smart to get into Harvard. Fuck the guy in Harvard yard. Yeah. Gotta be careful, all right? That's a GMAT question. Don't you hate when you get tested on stuff like that? You're like, You didn't read the question. Like, the question sucked. What was the intent of that question? Why would you put this on the test? Are you trying to figure out if I did the work and did the studying and understand the concepts? You're a horrible, horrible professor, sir. Yeah, that really works though, right? So, all right. I know I have too much fun doing these webinars. I need to get more serious. I'm sorry. All right. So, anyways, if you're going to buy low, you buy it off the 21 because that's why we have a 21, right? I mean, let's cut to the chase then, right? I know everyone's busy. If you're a bull, you buy the 21. Do you know why? Because that's what the 21 is. That's why we have it there. And what about this red zone? That's where you take profit. You know, I talked about that for every day for 4 or 5 days in a row, right? That's where you take profit. That's why we have it there. I don't know what else to tell you. There's resistance. There's dynamic support. I don't know. I mean, that's all I got. Right? Robert's on any time frame. Yeah, absolutely. Any time frame. Whatever time frame you're trading, that's going to be a dynamic level of support. That's what they are. Okay? This one means if you buy it here, it's supposed to make a higher high. So you better already be fundamentally a bull. You're like, yeah, crude's on its way to 65. I got this. I'm going to buy it off the daily 21. I'm done. It's supposed to be that easy. Supposed. Okay? But you better be a bull. It's only relevant if you're a bull. Well, that's not true because even if you're a bear, it's going to bounce there. Okay? And if you're a bull, Monday, was it? Or no, it was last week, wasn't it? Anyways, you were supposed to take profit there. I mean, I talked about that every day for a week, right? I mean, it's so obvious. If you didn't take profit there, you're just not a disciplined trader. And I put it to you back then when we were first getting there. I'm like, look, I know it just spiked. I know we just drove this up from 56 to, or 46 to 56. I get it. But if you don't take profit here, you're not disciplined. Right? I did say that, right? We did talk about that, right? The discipline part is actually taking profit. Right? Cool. And if you were going to buy it again because you thought it was going to go to 66, then that's an acceptable place. Okay? But that's that. And that's how you use the 21. And once again, if you didn't know that, well, write it down or read the book or take the basic training course or take watch the strategic and tactical Forex training videos. I don't know, but it's there. I've been teaching that since the very, very first, and I don't think they even do them anymore, do they? Forex Trading Expo. Right? So anyways, there's that. And that's a sell zone if you are a bear, because you know that's where bulls are supposed to take profit. Now, when we drew this, let's go back. Let's just make sure. I don't know. You're probably sick of me talking about this. But I don't know. Let's just do it anyways. When we were here, I said, stop, get out, stop trading, take your profit. You're supposed to be a bull taking profit. That's it. Done. Then I said, look, it doesn't necessarily mean it's going to fall. What it means is you're supposed to take profit. Right? Like, that's that. But if enough bulls do take profit, it might come down. It could come down. It doesn't have to, but it could. And if it did, we're looking between the central pivot and the M3. Basically a reverse trade, right? This is a counter trend trade. But it doesn't have to do it, and you don't you don't need to put it in your repertoire. You don't really want to make a habit of counter trend trading because it would be probably the highest risk, lowest reward methodology of making money, right? But anyways, if it could, it might. And then, so anyways, here's a rollover. I call this an old man easing into a hot bath. So if you've been trading with me for 10 or 15 years, we call this an old man. Great. What I did a few days ago is we looked at this, the range, right? It's pretty accurate range. It's not drawn perfectly, but okay. That predicts a move down to here, which it did. Cool. So now what? Well, if you were bull, isn't it interesting to think that this is now the daily 21? Right? So if you happen to be a bull and you were doing your analysis and you were trading crude oil, you should know everything there is about this. You should certainly know where the daily 21 is in an uptrend, right? Like, isn't that like, I mean, alphabet stuff, right? Oh, I trade crude oil. Where's the daily 21? I have no idea. I haven't looked at the daily chart in weeks. You're a professional oil trader. Uh-huh. You haven't looked at the daily chart in weeks? No. No, I don't do that. That's not what I do. Right? So, I mean, that would be a basic assumption. You're a bull. Where's the 21? Okay? Fine. Now, I want to switch it around, though. If you're a bear and you're not prepping to sell this, then there are two things possible. You're not a bear or you don't know what you're doing. And you're like, well, Wayne, you just went over how this is a bullish entry. Yeah, down here it is. So why would I be selling it? Well, because you're a bear, not a bull. This is a breakout roll reversal 1, 2, 3 setup. And where's the target? Somewhere between the central pivot and the M2, which we discussed 11 days ago. And this line here, what? Yeah, that one. How do you get there? Lower low, lower high, lower low, lower high, lower low, lower high, lower. Right? So you're in the business, your beeswax is selling lower highs. Right? I guess too much Dave Chappelle this morning. No, he was doing the one where he says he's on an airplane and terrorists have taken over and they got machine guns and they're like, yeah, and he's looking around. There's one other black guy, and the other black guy, they make eye contact, and the other black guy gives Dave Chappelle a thumbs up, and Dave's like, hey man, gives him the thumbs up back. And he said, when the white guys noticed this, they all freaked out because they thought the two black guys were going to like save everybody and run at the terrorists. And he said, but what really was happening between the black guys is they know terrorists don't take black hostages. They just don't take black hostages. So they're like, they're fine. We're good. Woo! The racism worked for them. So I thought that was pretty funny. So he says the terrorists call the White House. White House, we have 5 black, click. That's the hostage negotiation. So anyways, it was pretty funny. Yeah, in the middle of the, when the sun hasn't risen and you're already listening and stand up, I don't know, it was fun. All right, so that right, that's you would sell there if you were a bear. You buy that as a bull. I don't know what else there is. All right, cool. This we had coming down a little bit further. Okay, as you can see, this was an uptrend, and we immediately set it up as a retracement before it even started to retrace. It dropped down like we thought, kicked up to 21. Great, a bull would buy it there. Therefore, a bull would think it would make a higher high, but it didn't make a higher high. That would be where the bears get in. Lower low, lower high, which I drew this when we were still up here. It came down, not quite all the way, but it did make a lower low. And then it retraced a bit, but not as high as I thought. But it did. And then it dropped low. And then it made a lower high. Then it made a lower low. And we were using this channel to what? To predict the slope of the retracement, but more importantly, to give us a technical indication that the downward move has ended and maybe the upward move has resumed. Well, it came in here, it broke through, and we're no longer in that channel, which gives gives permission for the bulls to get back in if they so choose. And it looks like they're kicking off this, right? I had it going a little bit further, but bear in mind that was 3 weeks ago. There's a lot of water under the bridge over the course of 3 weeks of trading, right? Especially if you're staring at a 15-minute chart all day. You're like, 3 weeks of data? I can't get through 3 hours of data, right? So you're like, okay, well, this may technically be important. Or should I say, this may be important technically. Okay? And did it bounce at support? Oh, yes. Now, I don't remember how we came up with this target. It must have been last month's. It might have been October's pivot points. I mean, we're almost done November, right? By the way, I might get on a plane today and fly to Hong Kong. So I'm going to have to try to do some webinars and stuff from Hong Kong again. It might be Singapore. I don't know. Maybe I'll go to Singapore. I don't know. Right? Depends. I have to talk to Danny. But then, and then I got to get back, and then I'm hanging out on the beach for 4 or 5 days in Florida. So life is tough, man, because that's a lot of flying. That's a lot of hotels and steak dinners and cigars, and how am I going to get through it? Well, I don't do webinars through holidays, and it's not because I'm like out partying or something, because most holidays I don't even leave. It's that the markets are thin. If New York shut down, I don't want to trade at all, because technical analysis is a self-fulfilling prophecy. And if you lose 30 to 50 to 70% of the market because of everyone's on holidays, then I don't want to trade, because technical analysis may not be as effective. Or I say, oh, look at this pivot, man, I got to dump it off here because I know everyone's going to dump it there. But all the smart money's out, flying around in private jets, right? And who's the one doing the trading? Amateurs and interns. Some intern at a hedge fund is making the big shot. He's got a short stack and he's going to do some trading, but it's not the big boys, right? So things may not work as you normally would. You're like, oh, look at that M2, and you shove your stack into the market and it fails, and you're like, well, how come no one else bought this M2? Because you're working like a dirty dog, and the other traders are flying around in the Caribbean and they're drinking champagne and all that kind of stuff, right? Yeah, but it's funny, right? Hey, intern. Hey, recruit. Here's a short stack. Don't blow up the account while I'm gone, huh? Play on the beach. I'm going to be on the beach playing with my naked fat Barbies. It's going to be great. So, beep. What else we got going on? I guess let's go through the yens. Or did we do gold? I guess we got to do gold, right? Just out of respect for what we're doing. So we're still in here. You tell me. We had this as a buy zone and this as a buy zone. But we had no real sell zone. Right? Because remember, I'm short-term bullish on gold and short-term bearish on US dollar. So how would you rate this week as far as our analysis? Okay, Monday's buy zone is here. Okay, Tuesday's support is here and here. Wednesday's top, Thursday's bottom. Don't call it an inverse head and shoulders. What is short term? Undefined. But I would say influenced by market conditions, not necessarily fundamentals. So again, I mean, instead of calling it short term, I could call it short run. See, what's the difference between short run and long run? Short run and long run economics. Well, one would be more macro, one might be more micro. I don't know. So undefined, inconclusive, but not long. Days, weeks. So for example, over the course of the last several weeks, I don't believe any of this is truly fundamental, like supply and demand has really changed that much. Okay, so it's other things besides supply and demand for this actual commodity. So I have this all lined up, you can see, for months now, really. This is my floor. This is where I say, okay, enough's enough. We've sold off gold for about 5 years straight, I think, right? Right? And so now this is fine. This is fine for now. This is a reasonable price. I don't think it's going to go any lower. So you either walk away and not trade it, or you look for buying opportunities if you believe it can't go any lower, or not can't, that it won't go any lower. So then you get scenarios like, I thought it was going to rise up here based on already tested our support, already made a higher high, therefore 1, 2, 3 roll reversal, which it did, would put this long, which we had a trade plan for, and it worked for a day or two, and then it failed. Shoot! But then it came down to the support again. So what did I think was going to happen? That we were going to head up. Cool. And it didn't. We just flopped around here like a dead fish out of water, right? Tried to make a higher high again. And so therefore you would think that I would want something like this, which is, right? This is also the swing, which we did get. So that means if it does that, it's going to come up, hit this resistance. And we did talk about this. I did write it down. I did everything. Do you know why? Because we talked about it. Everyone can see that up top. It's going to be resistance. I don't know if it's going to be a reversal or a retracement, but I see it. It's there. Therefore, it is. I don't know how other people are going to treat it, but you can't assume we're just going to blow through this. Do you remember talking why? Because we're not in an uptrend. If we were an uptrend, we'd cut through that like a hot knife through butter. But we're not in an uptrend. We're in a sideways trend. We're range bound. Therefore, it will hold. Oh, it will hold. Do you guys remember that conversation? It will always, 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 always hold until it breaks. Okay? And it did hold. Dropped all the way back. But we already had this presumption that it would come up there. We don't know when. When I drew it, I didn't know when it was going to hit. But when it hit, it's going to retrace. And then maybe as a bull, I would think it's going to head up. Do I know if it's going to head up? No, but I know what bulls are thinking. And that's it. So you keep planning your trades. This one worked for a day and then failed. This one worked for a day and then failed. All right, this one worked for a day and failed. This one worked for 2 days and is retraced, but not necessarily failed. Right? I have it coming back to this area here. I'd call that pretty accurate. So now all we're waiting for is the fulfillment of our destiny, which is greatness. And you can see I've already drawn it. Right? This has all been pre-drawn. It's what I thought was going to happen here. It's what I thought was going to happen here. But isn't that how a bull thinks? The thing is, do you have a thought? And do you put plans behind it? So the thought process is a bias, right? Trade plans are your strategy. And then the tactical part is, buying 5A crosses off the bounce of support here on a 15-minute chart, whatever, kicking down the door, right? It's not in strategy. Right? In our business, you got to be the general and the grunt. So, do you want to start a hedge fund and start buying up Zimbabwe currency? Do you think it's going to get worse or possibly better over the course of the next 5 years? Yeah, Robert, I can fix that though. Yeah, well, it can't get any worse, right? Right? Well, yeah, make sure you get some money and then negotiate a swap account. Well, Robert, what you could do is like roll into the country and buy trucks of the currency. No, I am not joking. I know people that are literally buying gold in Africa. It's very, very difficult. Everyone wants to cheat you. But if you can do it, you're buying it way below market prices. So like if you were a hedge fund, you could raise the money and say, all right, I'm going to go to Zimbabwe and I'm going to meet with every scumbag politician, right, and central banker, and maybe some drug lords and some warlords and anybody that's got huge amounts of cash. I'm going to buy it cheap, exchange it for dollars, your dollars. And over the course of 5 years, things will improve. A lot, maybe. I don't know. And of course, I'm exaggerating and all that kind of stuff. But I don't know, if things can't get better, maybe things will get worse. Yeah? Yeah, see, I don't know anything about it, but that's the thing. You had a ruler there that is absolutely, completely destroyed the economy and credibility of an entire nation. So maybe it'll get better when he's gone. I don't know. I'm just saying. Isn't our job? I mean, okay, let's stop talking currencies for a second. Isn't it our job just to be the type of people that make money? And we think ahead, cause and effect, cause and effect. Right. There's an earthquake in Chile, so you buy copper futures seconds after it's announced. Right? There's a tsunami in Japan, you immediately buy Japanese construction companies that have connections with the government. Right? I remember sitting and talking with my children on the backyard. We were actually having a picnic one beautiful afternoon, warm and sunny, sitting on a blanket. And we're talking about how at that time there was some sort of scare in the United States about eggs. I can't even remember, was this 2 years ago? And so anyways, we're discussing how to make money from this situation. Which fast food companies are going to be hurt, which ones are not going to be hurt, all that kind of stuff. Just, you know, it's always a cause and effect thing. Many years ago, the United States government announced the highest planting of corn since World War II, when planting corn was a requirement. And this had to do when oil prices were really high. So farmers, in their infinite wisdom, decided to plant corn because corn was in demand for ethanol. So I said, all right, you need to short sell corn, right? You need to buy wheat. You need to buy Potash Corporation of Saskatchewan. The reasoning for there is, well, let's go through all the reasoning. You sell corn because there's going to be way more corn than needed because all the farmers planted corn. There's going to be a surplus of corn. Corn prices will fall. Be way too much corn. Well, if you plant corn in a field, you can't plant wheat in a field. So if there's way more corn than normal, then wheat farmers have decided not to plant wheat, but to plant corn. So there will be a shortage in wheat. So you should buy wheat futures and sell corn futures. Surplus of corn, shortage of wheat. But also corn requires like double the amount of fertilizer when you grow it than wheat does. So that same wheat farmer that used to plant wheat but now is planting corn is going to need to double his purchase of fertilizer. So who's the largest fertilizer seller of fertilizer in North America, or maybe even the world? Well, that's Potash Corporation of Saskatchewan. So you should buy all of that. Okay? And then the wheat farmer, he doesn't have the right combine equipment. He has the combine equipment to harvest wheat, but he doesn't have for corn. So he's going to have to go to a John Deere and buy the attachment that goes on the front of the combine so that they can, pick the corn. And that year, corn prices plummeted. Wheat prices went to like an all-time high. Potash Corporation of Saskatchewan doubled, and I think John Deere was modestly up. Cause and effect. The data's out there. They just give you information. So I'm thinking out loud, like maybe I need to buy up Zimbabwe. I don't know anything about Zimbabwe, but maybe I need to buy it now because it can't get worse. This might be a bottom. What about Saudi Arabia? Maybe I should be short selling Saudi Arabia. How long does Saudi Arabia have until they're in serious trouble? How long are oil prices going to stay low? I don't know these things, but I can think about it, right? But isn't this, as traders, we can be thinking about all that, right? John, I wrote a paper at Harvard that suggested we need to rename the Middle East and call it the Far West, because the distribution cycle of oil going from the Middle East to Europe and more specifically to the United States is going to shift, and the oil is going to go around the other way and head to China. And from China's perspective, the Middle East is the Far West. The U.S. is a swing producer, okay? And it just started in the last 2 years exporting oil, but it's not very much at all, okay? The United States consumes its own garbage, okay? And we put a lot in the Strategic Petroleum Reserve. But yes, the United States does export, but not much. Not much. Not much. All right. It eats all it can, and then it brings some in from Canada and a lot less from places like Saudi Arabia. Yeah. But the United States right now is at 9.7 million barrels per day production. You knew that, right? So when you talk to your clients, you can say things like that, right? Well, as you know, the United States is at 9.7 million barrels a day of production, which is at a 40-year high. This has to do with fracking. So let's talk about the new equilibrium price in the global market and how this can affect currencies, and specifically, reveal opportunities and threats to our portfolio. You want to start? Huh? You got to get there. You got to get there. The world needs a hero. It might as well be you. So I got to go. I just got pinged by somebody, and it's 8:53 and stuff. So yeah, see, hang on. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. And maybe I'll see you in Hong Kong on Monday, or Singapore, or maybe Dubai, or maybe here. I have no idea. See you soon. I might swing by London on the way back, but I got to get home for Thanksgiving. And then I'll probably head back out after Thanksgiving. But whatever. Yeah. See you Monday.